Welcome back. Now, Amplats has given its shareholders a reason to smile. Ahead of its demerger from parent group Anglo American later this year, the miner declared a final dividend of R3 per share, along with an additional cash dividend of R59 per share. This amid headline earnings per share having slumped by 40% during the annual period. Mining analyst Peter Major joins us with his assessment of the company. Peter, thanks so much for your time this afternoon. Who knew that a takeover bid would be the catalyst for restructuring at Anglo? And today, Amplats numbers out, of course, that big payout to shareholders really stealing the spotlight. The last time I looked at the share price, it was up about 1.7%. That windfall seems to be pleasing investors, or is it the fact that perhaps they had priced in the 40% slump in earnings?
Yeah, I think they priced it in all right, but they realized on these results, Anglo's has a good operation here. Mm-hmm. They've always had quality assets being ore in the ground. Amplats, without a doubt, has the best ore bodies in the ground, has the longest life expectancy, 100 years out of them. And all the platinum producers have taken huge pains since COVID because they had spectacular PGM prices, as we all know. And rhodium, palladium, they went up the most, but they fell the most. Platinum only went up a little bit, so it didn't fall too much. Mm-hmm. But you'll notice in their revenue, they've got a really nice split. This is the difference between Amplats and De Beers. De Beers just produces diamonds. When the diamond market slumps, they're crucified, and there's really very little they can do. Close mines, retrench people, or work half shifts. But with Amplats, they've got a good revenue base. If I just look at how their revenue is broken down, palladium was a third, 36%. Sorry, palladium was 22, but platinum was 36. Mm-hmm. Rhodium, 20%. The other PGMs were 14%. Base metals were 10, chrome 4. So that's a really nice spread. See, all you need is a running rhodium price.
Yeah.
And it's already Christmas. A running palladium, it's already Christmas. So the prices of most of these metals are gone to fairly neutral levels. So I think the market realizes these enormous falls in metal prices and earnings and share price are a thing of the past. Now they're starting to accumulate because it's a great cyclical share.
Yeah, so besides, the lower metal prices, I guess operationally the business did well.
It did very well, especially on cost control. It's unbelievable that a mine in this country can control costs to the extent they have. 3.5% costs. Consumer inflation's over 5%. They probably can't replicate that, but it's nice to see. They've done a good job. Let's
just get your thoughts around the demerger plans and just Amplats as a standalone business.
If any platinum company can stand on its own 2 feet, Amplats can. Because not only do they have a diversified revenue base from what they produce, from their ore, but a third of their production comes from concentrates from other producers. So they do make money, additional money on their smelters, bringing in outside concentrates. And they make money off the chrome from their concentrates they bring in from other people. They make money off the base metals, etc. So they've got the most diversified income base of any platinum producer. But I, for one, am really going to miss them being in a mining house because I think shareholders had the best of both worlds.
Yeah.
They could own a quality platinum stock, but if they ever encountered really rough times, like we saw 2012, 13, 14, 15, 16, you had this big brother to stand there and support them. Now the company, if it ever has real low platinum PGM prices, it's going to have to go to the banks and the market for that kind of support, which is going to charge a lot more and going to put on a lot more conditions. So I don't think South African mining is better having all these individual producers instead of being under mining houses, but they are listening to what supposedly the shareholders want and what all the propeller head test tube baby analysts are always asking for.
Let's look at the PGM market in particular. Are you of the opinion that, we've reached the bottom of this cycle and that, we'll probably start seeing these prices rising moving forward?
Natalie, I would love to believe that. But what we've got to keep in mind is the world platinum market, the world PGM market is very small. There is no shortage of PGMs. We've got more PGMs in this country than gold, and we have not quite half the world's gold, but close to it. So we have unlimited PGM resources. If you produced all you could, the price could collapse. And so they really have to tiptoe around the market. They have to try and create new uses for the PGMs. And that's why we worry so much about the jewelry market. We worry so much about auto cats, because if one of those big sectors goes, it can knock prices even much lower than they are now, and they can stay there. So this is a delicate market. This is not iron ore, coal, gas, gold, or the base metals. No, this is a really specialized market. We have plenty of resources, but gee, you want to produce them at a profit for the good of the country.
All right, Peter. Unfortunately, we have to leave it there. Thanks so much for sharing your insights on Amplats' annual results. That was mining analyst Peter Major with his take on Amplats' annual earnings and demerger plans.